how bad is 7.1 from the point of view of the expert? Sachchidanand Shukla from Enam Securities joins us in a bit. Okay, Gaurav is also with us from the Royal Bank of Scotland. Sachin, to you first, what would you make of 8.1? Our poll threw up 8.2.
I think if you look at the base, it has not changed at all. And the fact is that with an unchanged base, we have come from 11.5 to 7.2, which is a 430 basis point drop, which tells us how strong this base impact was. I wouldn't be terribly disappointed because if you look at the numbers, one, there is seasonality. Second, you have the base impact. And if you look at all these lead indicators coming across from the West as well as China, the PMIs, everything has been disappointing. And viewed in context of these three factors, I think a moderation was in order. And this should not be seen as a drop in, a huge drop in output in India or demand slowing down dramatically. Okay. So I'm not disappointed. Okay,
you're not changing any of your other numbers, therefore, considering, Sachin, that capital goods are at 9.5. I mean, almost a modest rate of growth compared to those huge double digits we had for the last 6 months, I would think.
I think there was some incongruity in the capital goods data that we have been seeing over the last couple of months. A 9% number, I think, ties up with the anecdotal evidence that we have in terms of bank credit growth that is happening. Disbursements to these the infra segment in particular. I think this number ties down with the reality and the numbers that we were seeing in the last few months. I think were not congruous.
Okay, well, I had to interrupt you because the May numbers have been revised lower to 11.3% from 11.5, which was the earlier reported provisional estimate, which means the month-on-month improvement is even better. May index would perhaps go down to about 310. So actually month-on-month we perhaps are doing 1% higher, June over May, or so it seems. Gaurav, let me toss all these numbers to you. May has been revised lower from 11.5 to 11.3. June has come in at 7.1 compared to expectations of 8.2. Your first comments.
Well, the June number is completely in line with what I had expected. The number is actually, our number was around 7%. So this number is clearly no surprise. It's base effect, it's seasonality at play, and I think if you consider the fact that IIP numbers headline tend to be volatile, and if you still continue to look at a 3-month moving average, the number is still in double digits. So I don't think the number is worrying at all, as you were pointing out at the beginning, that it's certainly lower than consensus, but I don't think that means much at this point in time. I think one has to watch out for the slowdown in investment activity. If capital goods growth at 9.5%, clearly much lower than what we've seen so far, but one has to see whether this persists, because I think investment activity revival is the key for the economy to grow at over about 8.5%. What the broad consensus is at this point in time.
Well, Gaurav, so how much would you worry about this capital goods coming in at 9.7%? Distinctly, are you seeing investment activity slowing down, or do you think these numbers are too erratic, as Sachin is suggesting?
I think I would go with the fact, with the point of view that the numbers are erratic. I think you have to see the kind of growth you've seen over the last 6 months. The average growth was 43%, and even if you again look at a 6-month moving average, the number would still be a fairly high number. And it's some kind of correction, some kind of slowdown after this period of very high growth is to be expected. So it's not it's just a kind of a blip in the trend, but the point really is that if this persists, then we need to look at things a little more carefully.
Point taken. In fact, just let me... the other question obviously that comes to the mind, Sachin, would be what therefore from the RBI? Optically, 2 months slower than what one predicted. Remember, 11.5 in May itself was a huge disappointment compared to the polls which threw up 14.5%. Now that's come down to 11.3. And again, June is a tad lower than what the street estimated. So do you think the Reserve Bank would be perturbed by these numbers? What kind of action do you expect in September, for instance?
Okay, I think we need to look at it in terms of the nominal data in terms of IIP. The base is going to be adverse till September. And as for capital goods, it is going to be alternating. What I'm trying to say is June has been bad, July is going to be a favorable month, and the month after that is going to disappoint. So if the RBI will be looking at the underlying skew in IIP growth, and my feel is that if we were to look at it in terms of the 17 industries, the skew is now getting corrected, and the bottom 12 industries are now growing at the same pace on an average as the top 5, which have a weightage of about 45%. So I think the underlying growth remains strong, and I think the RBI will not be faced by the seasonality or the base effect. I think that RBI will have to take a measure in terms of repo rate hike. We expect another 25 basis points in September. So no change in the RBI policy on that front.
Okay. Same question to you, Gaurav. The most important part about these industrial growth numbers is whether that will, skew policy in any way or change policy any way. What's your sense? Are you also going with a 25 basis? Do you want to change that view?
No, I think RBI would repeat the July kind of rate hikes of 50 in reverse repo and 25 in repo. I think this data is by and large in line with the 8.5% growth is what RBI has already kind of built in its monetary projections, I think, at this point in time. And if you look at the leading indicators, or if you look at the other survey data, including RBI's own industrial outlook survey, I don't think the situation is alarming. At this point in time, I think RBI's main focus will remain on inflation, and I think we're just about a day away from the July number, and it's widely expected to be close to 11%. Demand side conditions remain fairly strong, so RBI will continue to focus on managing the demand side pressures in the economy. I don't think industrial production numbers per se will deter the RBI from doing what they have to do in terms of, managing inflation expectations, which are running fairly high at this point in time.
All right. So finally, I would like your final numbers for the year from both of you. Gaurav, what are you going with in terms of an industrial growth for the full year? And are you altering it in the light of the 2 months of slower than expected numbers?
Well, I'm going in with about 8.7, and I don't think there is any need to alter these numbers at this point in time. I think this, as I said earlier, the base effect and seasonality, the number is pretty much in line with what I'd expect.
8.7 is your industrial growth number?
Industrial growth, yes. For GDP, 8.5%.
Okay. Same question to you, Sachin. What are you going with, and have you altered it in the past 2 months looking at the data?
Not really. The industrial production numbers are panning out as expected, and we have a number of 8.9% for the IIP for the fiscal year, and GDP we are at the same 8.5%.
All right. Sachin, Gaurav, thank you very much for joining us. It's a very important takeaway from the experts that you shouldn't be disappointed that the industrial growth number has come in a full 1 percentage point lower than what the street was expecting. Remember, much of it is because of the base. Month on month, this still counts as June doing better than May. That important point needs to be remembered. I cannot do the calculation. It has to be seasonally adjusted. But I can tell you from the face of it, from the index, that it is month on month a better number. But like